it's a really competitive market. We've been looking for staff. The banks are doing record volumes at the moment, so everyone's looking for good people with those types of credit skills and has experience. So definitely, people are forced to do that because they can't handle the volumes. And there's been comments from a lot of people within the industry saying that finance is particularly slow at the moment, no matter where you go, because of the amount of volumes that the market and these low rates is creating. So it's definitely, there's a need, and there's only so many hours in a day that people can work. So it's really, really important that they leverage, and you can't multiply yourself, but you can buy back your time by getting staff on board. I gave Phil the example where I hired my first loan packager at the time, where at the time I was writing about $3.5 million in settlements, and she came on 3 days per week. So I think her salary at that time was about, call it $23,000. So, and within 3 months I was settling an additional sort of 1.5 million. So if you look at that from a dollar terms, and that 1.5 million, let's say that's about $7,500. She's costing me about $2,500. So as a return on your investment, I'm a property investor, as you know. So I spend $2,500 to make $7,500. So as a return on your investment, it's a pretty good return on your investment. So it just makes sense. Because of the volumes we do, we get priority service amongst. It's basically, and a lot of our investors will do a pre-approval, so they're ready to take advantage of opportunities that come in the market. So normally they're ready, so when they've actually found a property, it's just a matter of getting a valuation and processing it to formal. That's really the market of the future. I think that's where it's heading, and you look at the median price of property in Sydney approaching that $1 million mark. How are our children going to get into the market? So I think that'll be the next sort of wave of investors, especially when rates increase from where they are and there's not an activity. You're already seeing the yields in Sydney, where Western Sydney particularly, where a lot of my clients, they were getting those 6-7% yields. They're now more like a 4.5-5% yield. So the yields have gone away. They've moved out of Sydney. Brisbane, there's still some opportunities, but when those opportunities are gone, I think it's going to be those first home buyers that are going to come back in the market, helped by mum and dad. So they won't need the high returns because they have, quite a lot of them have a decent disposable income along with that rental income to help them pay the mortgage. Their parents have all got, a real boost over the last, couple of years in terms of the equity in their property. So they're sitting in a good position to be able to assist with the equity in their property. So I think longer term, I think you're definitely going to see that as a market. Give say 18 months time, I think you'll see the emergence of that market a lot more.